Hey everybody, still here. Daily Market Pulse for Tuesday, February 11th, 2014. So markets, wow, almost shocking, but not at the same time. This is exactly the kind of stuff they were doing last year. They dropped no more than 6% in a correction and then would bounce back aggressively. And here we are again, almost identical percentages to 2013. I'm a little speechless, but whatever. It is what it is. It's what's in front of you. It's what you do. It's what you take, and you just go with it. There's no fighting it. So, up in higher volume, confirm uptrends restarts after a very short 2 weeks. We were in a correction as of the 29th of January, and only a few days later, 2 weeks later, calendar days, here we are. Okay, Dow Jones, you can see, look at the steep incline. Harami, Doji, and then boom, boom, pause, boom. Never in my wildest dreams would I have thought that that was going to be the signal for the reversal. That kind of reversal candles at the bottom, those are just usually slow down. Maybe the selling has stopped. They're usually not necessarily the most robust of turnarounds, but here we are. It is what it is. Back into the beyond the 50% retracement, into the 20-day moving average, of course, which is declining below the 50 now. So there's still some overhead here, of course, but nonetheless, there is an uptrend intact here. So let's go look at the S&P. S&P right on through the 50% yesterday, then right on through the 20 and the 50-day moving average now as well. This also had a dead cross occur several days ago, but price action now back over. Now the target becomes the former highs back at 1850. So if it's going to drop, the 20 moving average, 50-day moving, most of the 20 moving average with the rising window from today will be your likely support, including your 50%. Nasdaq always the strongest, isn't it? It's right back to the former pivot area from back in December and January. Not quite at the highs yet at 4250. But that's in striking distance, of course. It's got a rising window as well. It closed above the 20 yesterday. 20 was still above the 50. The 8 moving average is still below both of those, however. But 4250 now becoming the target next. If any drop, like I said, 4150 in the window below in the 22 moving average will be your support that's expected. TSX continues its trek up. We had talked about this before. If the TSX was any inclination of what the U.S. markets were going to do, the markets were going to go higher. Well, here we are. It looks like maybe that was the case. Back to 13,900 at this point. Once again, striking distance of 14,000. Support will be the moving averages below the 20, and with the 8 especially crossing over the 20, that'll be the likely spot on the TSX. U.S. dollar, Canadian dollar still flagging right into the 20-day moving average for now and just holding steady. I don't recall exactly maybe I should just leave my retracements up here. There we go. So it's at the 618 right now. So that's an expected area to hold. Otherwise, maybe the lower Bollinger Band, the 50% at 109. We'll see how that goes. Treasuries continue to test following Friday's test of the 220-day moving average down here at the in this case, we have the 764. Well, actually, that's not even correct. That's not right. That's absolutely not incorrect at all. Hold on a minute. That's the 618. That's the 618 as well with the moving averages and so on. So it's still testing that area, looking for the likelihood of a pop back up to the upside. Japanese yen doing pretty much the exact same thing after a nice run up. It let everything catch up. The 8 moving average is still there. It's a price action between the 8 and the 20. 20 has crossed back over the 50. The 50 is just starting to flatten out, so things are starting to stabilize. So gold finally had its breakout session, got over 1280 at this point. This is what we're talking about. Above 1280 long, below 1235 was short. So at this point it broke out. Just got to be careful for the possibility of a falling off the roof. Where it's at this point, if it's it breaks out this way, and then if it fails, as soon as it comes back below the goal line there, essentially 1280 area. I should maybe raise that up just a little bit. If it goes below that, then you essentially have a failed breakout and you're looking for an immediate short. Silver, however, lagging. So we know that 2050 is essentially the mark where it needs to cross and go. It's not even anywhere near there, so it's definitely like, look at all the moving averages. As soon as it starts to move, you're going to see this thing probably pop pretty hard. So this is kind of fair warning that this could go hard and fast, and one may have a chance to get in. And crude, well, um, right at the century mark, just below 101 area. That was the target. That's where it is. A couple of dojis back to back, including today. Now you got a little bit of a gap higher here after hours, testing this area and resistance with an overbought condition on the stochastic. So expect maybe some profit taking, a little bit of grinding in through here before it actually has an attempt to go higher. Moving averages are starting to cross. You see the 20 crossing back over the 50 now. So everything's strengthened. So if there's a quick drop, that would be probably an immediate sign to buy on any kind of a dip. Okay, then small caps, of course, just like everything else, bouncing off the lows, came off 108, came up after the Hatami, a reversal and through 110, through a pivot area of sorts, but still living below moving averages. And this is again sort of a little bit of a quandary that I've had before. This is a little suspicious to me. Small caps are risk on. Where is it? If markets are that high, where are the small caps? It's a little odd to me. So we'll see. We'll see if this is a real uptrend or not. The VIX, of course, has come back down. It's got a falling window at 17 into 16. Faded into the 50-day moving average and the 1450 area. I'm still looking for a little bit of a bounce. Now the markets at some point have to fade, or at least sideways consolidate, profit take, whatever it may be. So I expect a little bit of a bounce here, but who knows what that's going to mean. Again, if there's a failure in the markets, then you'll see the VIX bounce right back toward 18 plus. And here's what we're looking at with the put-call ratio. Everything was looking like, of course, it was climbing pretty rapidly on its way toward 1, and then, of course, now it's failed. Now, it doesn't mean it can't possibly pull back and then go back up again like a stair step. That's possible, of course, as well, but who knows? It's done in the past. I can show you back a ways. Like here, got up, came back, and then finally went right on through here. Same thing, up, down. There's one clearer than that at one point or another. Maybe I'm missing it. Oh well, I don't think I see it here. I thought I saw it before. You get the idea anyway. So here's one coming up and then fade a little bit before it finally spikes right on through. So hard to say what they're going to do with this, but I thought this was well on its way toward 1 plus, but it didn't. So it is what it is. All right.